Fight or flight. A group of U.S. heavyweight executives are arriving in China this week. They come from big names such as Goldman Sachs, Starbucks, Nike and Qualcomm. And the visit couldn't come at a more special moment. During the just concluded third plenum of the 20th CPC Central Committee, China announced a series of commitments to further deepen comprehensive reform, including creating a transparent, stable and predictable environment for foreign businesses. Then, hours ago, Joe Biden announced he will not run for re-election, a move widely seen as a boost to former President Donald Trump's chances of winning. What are the business executives seeking to achieve in China? Could China's latest announcements further boost confidence for foreign investors in general? Welcome to a special edition of The Point, an opinion show coming to you live from Beijing. I'm Li Xin. I'm pleased to be joined from Boston by Professor John Quelch, Executive Vice Chancellor at Duke Kunshan University. From Beijing by Zhao Hai, Director of the International Political Studies at the National Institute for Global Strategy. From Washington, D.C. by Surab Gupta, Senior Asia-Pacific Specialist at the Institute for China-America Studies. And from Qingdao, on the line of East China's Shandong Province by Victor Gao, Chair Professor at Suzhou University. Gentlemen, welcome to The Point. So, the big news, and people here in China woke up to the announcement of Joe Biden's withdrawal from the re-election. Professor Quelch, let me go to you. What do you think is the impact of this announcement, or potential impact of this announcement, on American businesses here in China?
So first of all, I think the withdrawal was significantly anticipated over the last week. I don't think that it necessarily means that former President Trump is even more advantaged in the upcoming election, because I think Vice President Harris is going to prove to be a much more formidable candidate, assuming she's approved at the convention, than people expect. I think that Vice President Harris, being from California, will be very familiar with Asia-Pacific issues. She'll be very familiar with the agenda and investment interests of Silicon Valley business, and therefore may actually, if elected, present an opportunity for a reset of China-U.S. relations that might possibly benefit the overall commercial trade and investment activity between the two nations.
Mr. Zhao, do you share Mr. Quelch's sentiments or prediction at this moment?
Well, first of all, China's official policy is that the election is American domestic politics, so we don't comment on that. But for my personal view on the economic relationship, particularly from American business perspective, is that so far, I think the possibility of former President Trump get reelected is still continually rising, even with the replacement of Biden. And now Harris may have another opportunity to change the dynamic of the election. And also, because of the uncertainty of this election cycle, there's more coming down the road. So we can't be sure which one will be elected. But let's say that follow the current trajectory. If Trump wins the White House, China-U.S. relations will under great pressure, and American business will have to reconsider their strategy of operating in China, and also how to deal with the Trump administration's new tariffs, higher tariffs, and also this so-called strategic independence, in essence, strategic decoupling with the two countries. So I think there's a lot of uncertainties, and American business probably need more clearance, more clear-eyed about the future direction of the two countries.
Mr. Gupta, what is your analysis of the kind of impact that the news may have on the American businesses here in China?
I think there will be more continuity than anything else. I think that with the Biden administration's policies, she has been a champion of those policies, and I think that continuity will be good to the extent that from a macro perspective, the US and China have managed during the past year and a half to sort of stabilize the political relationship at the macro level. Yes, there are many actions that the Biden administration continues to take of a negative nature in the area of technology controls, technology denials, export controls, AI, etc., etc. I assume that will continue. The small yard, high fence, the yard will get wider, fence will get taller. But my view is that Harris has a difficult road to the presidency. This is not my personal view, what I'm going to say, but this election will be shaped in swing states, in working class America. Harris is a lady. She's a black lady. She's from California, which is deemed to be a liberal, progressive state. And as a lady in those parts of the country, it's almost people like Harris are viewed as people who have not done a day's honest labor with their hands. And she is going to have a great difficulty winning against Trump, this is exactly what hurt Hillary Clinton too. So we'll have to see. Mr. Biden could transcend those divides because he could speak to the common man, the working man. I'm not sure if Harris can do that, but at the same time, let's say Trump has a lot of negatives associated with him because he's such a polarizing figure, and that also hurts candidates. So it's still very much a toss-up which direction the election is going to go.
Victor, nonetheless, we are just 1 month away from the Democratic National Convention. What does the reshuffling mean, if I may use this word, say about the state of U.S. political landscape?
Thank you very much for having me. I think for President Biden to bow out of the presidential election is a realistic and pragmatic step for him to take. And we should appreciate him for the graciousness of bowing out. However, I think this really happened at a time when things cannot be even worse for the Democrats in general, because whether Kamala Harris will be the nominee or not, I think it really demonstrates in the fullest term the chaos and the uncertainty within the camps of the Democrats vis-a-vis a very much charged Republican party. And it seems that Donald Trump seems to be a bulldozer, really unfettered and ready to go to the hilt. So I think whether eventually it will be the Republican winning or the Democrat winning is still to be seen. But I think Donald Trump really has all the advantages on his side, and we really need to expect for his bouncing back into the White House. Now, we need to really analyze what would Trump's second term mean for American domestic politics as well as international relations of the United States, including China-U.S. relations. And I would say many capital cities in the world are now holding their breath for the second term of Donald Trump and need to scramble into action as to what exactly his second term mean and what actions we all need to think about in the coming months. It will be a completely change the landscape for the United States as well as for the world.
Mr. Quelch, it seems that you are the minority here on this panel. Do you think the business executives, the U.S. executives who are arriving in China this week, do they also share your optimism about the chances that Ms. Harris may have in the race? If she gets the nomination, that is.
Whether or not they're optimistic or not, they have to show up in China. Because they are heavily invested in China, and China-U.S. trade remains exceptionally important to both countries. And so, in a sense, regardless of whether or not there are additional tariffs imposed by a Trump presidency, business has to continue, and the concept of radical or total decoupling is simply not practical or feasible. I'd like to point out that although during the first Trump presidency, there were considerable pressures on the China-U.S. relationship, that trade in particular continued apace. Investment, of course, from the U.S. into China dropped considerably during the COVID period. But the fact remains that China is a 1.4 billion person marketplace, and no multinational companies, American, German, or whatever, can ignore that fact. So I appreciate American business people showing up in China. Last year, Tim Cook of Apple, Steve Schwarzman of Blackstone, etc., all showed up in China. China's very important, and business people show up where there is money to be made and investments to be consummated. So I see nothing unusual in what's going on. And one of the things I want to point out is that although the political show in America is extremely amusing at times and fascinating, millions of people get up in America every day determined to make millions of dollars for their shareholders or for themselves. And that continues regardless of who is in Washington. There may be restrictions that are imposed by one political party in power vis-a-vis another, but the entrepreneurial sentiment in the United States that drives the economy continues apace every day, regardless of who is the president.
Well, let's take a look at the evolvement of the perception of China's business climate. According to AmChen's 2024 China Business Climate Survey, there is a notable shift, which means half of the participants placed China as their first choice or within their top 3 investment destinations globally. That's a 5 percentage point from last year's all-time low. And this was also echoed by another global consulting firm, Kearney's survey released 4 months ago, which says China's global ranking as an attractive investment destination over the next 3 years has risen from the 7th place to the 3rd place. So regardless of what happens in the United States, Mr. Zhao, why do you think our business more optimistic in general about China?
Well, simply put, because last year they were too pessimistic. Because of their expectation are not met last year after the pandemic, many people in the business thinking that China will bounce back right after the ending of the COVID-19. However, that didn't realize because many people's, particularly the consumption powers, pretty much depleted and needs time to recover. So there's a general pessimistic because of the pandemic legacy, because of the geopolitical tension, and because of other concerns of Chinese policies. And therefore, last year, they were really pessimistic and it was overshot. And this year, I think when the sentiment touched the bottom and people start to realize that actually the Chinese economy is gradually coming back and the property market and the debt problem is not as severe as they thought. And also there's great opportunity, as the professor pointed out, there's 1.4 billion people consumption market, and the service industry has recovered in a quite good shape. So moving forward, I think many businesses need to cover their bottom and needs to invest more to share the future growth of China's economy. And just this first 6 months, the first half year, China's growth rate has been reported at 5%. And I think moving forward, the next half and then the next 2 years, China's economy will gradually pick up, and the business needs to stay here to get benefit from those growth.
Mr. Gupta, what is your assessment of the business climate here in China and the level of confidence foreign businesses have? Because if you look at the FDI, the actual amount of FDI in use, it seems to go down quite dramatically, 30% year on year. That's according to the latest for the first half of this year. And yet there are 27,000 new new foreign invested firms established across China in the same period of time. That's an increase of 14%. So are foreign businesses fleeing China, or are they staying, or more are eyeing this market?
I think they're staying, and more and more are eyeing the market. Let's step back a little bit out here. Just after COVID, the expectation was that there was going to be this huge boom in the Chinese economy, and that did not transpire. There was a very short one. And I think the government intelligently and smartly decided at that point of time that the way forward was not by throwing huge sums of money into a stimulus package or something like that, but making difficult reforms of the business operating environment. Premier Lei Chang made that a priority of his, and I think there have been quite a lot of measures which have been put out over the past 12 months directed at foreign investors. I think this was primarily encapsulated in August 2023 with the State Council's opinion on how to get more foreign investment. And that was thereafter redoubled in what is termed as like the 24 measures, which were put out this February. And this was not just about liberalizing foreign investment regime in areas like biotechnology and advanced manufacturing, but also dealing with many of the inherent difficulties that foreign investors were facing in the area of government procurement, in the area of cross-border, sending data across the border, cross-border data flows, in the area of having expatriates being able to do financial transactions, set up themselves. And I think there have been a lot of work that has gone in, which has not really been reported or understood, but that has been felt, accepted, and appreciated by these chambers of commerce, both at the American side and the European side. And I think we are now beginning to see that as being the confidence booster. Now, of course, with the third plenum and talk of further liberalization and opening up and breaking down local protectionism, I think foreign investors see that this is a market that that there's significant interest in. So I think there has been a lot of hard work that has been put in, basically.
Victor, how do you look at to me, there seems to be a gap in the perception of the business climate, or how they feel about certain efforts and what kind of efforts China has announced and actually implemented. Do you think there is a gap in terms of perception, or China really has not done enough?
Well, I would say, other things being equal, the business environment in China, including, for example, high-quality connectivity, pro-business environment in general, and highly skilled labor force, and the plenty supply of engineers of all kinds, and the cluster effect of supply chain inside China, for example, would make China one of the best places to do business with. Now, if the government intervenes, if they force the enterprises to decouple from China, or the enterprises, the companies of all kinds will feel pressure, of course. So they are caught in this unfortunate situation. They need to size up the situation, watch out for the headwind of the geopolitical maneuvering by one country versus the other. However, I think if they really go around to other countries to check out the conditions of the market over there and compare with the realities they are faced with in China, I think the reasonable decision is, first of all, they cannot abandon the China market, not only for their manufacturing capacities, but also the close access to the market over here in China. And then secondly, if they really discount all these warmongering rhetorics and the decoupling pressure from the government driven by ideological considerations, they will eventually be more rational in not only engaging with China and continuing to engage with the China market, but also to reinvest and increase the weighting of the China side of the equation relative to other markets. Now, you can also compare the China market with India. one China today is more than 5 times that of India. So we are talking about 1.4 billion population for China and another 1.4 billion for India. But then, theoretically speaking, at least, the China demand or the market size itself is about 5 times as big as the Indian market. So any business executive in his or her right mind of the right set of the mind will make reasonable business decisions. And the decision is, first of all, not to abandon China. Secondly, continue to engage with China.
Well, at the same time, China is further deepening reforms comprehensively to expand institutional opening up, first and foremost. That's according to a resolution of a very important meeting of the Central Committee of the Communist Party of China, which I mentioned in the beginning. And the resolution was published, and there are specific and very detailed content regarding foreign businesses. But overall, the resolution outlined 3 main areas for reforms or for further reforms in this area. First is business environment, second is market access, and third is institutional reforms. Professor Quelch, do you think these 3 key areas are the right areas to be working on from the Chinese central government's perspective? Will it be enough to inject at least a certain degree of confidence or greater confidence for foreign investors?
Yes, I think your use of the word confidence is exactly right, because when investors are looking at market investment opportunities, what they're looking at is the promise of continuity, the promise of regulatory consistency. The market access issue is obvious and has been for 10, 20 years, the size of the China market. Some companies have done very well in penetrating that market. Others have not been so adroit or successful. That's a matter of commercial capability. But when it comes to the regulatory landscape, that's something that the government does have influence on, and it's important that investors who are sitting on the sidelines be given confidence, and the perception that they have of China varies considerably. Some with great experience of China are perfectly comfortable and confident even in the current difficult environment, while others that are not so experienced as investors in China are skittish and waiting to see more evidence of improvement, more evidence of continuing government support for foreign investment. I might add that, as one of your commentators mentioned, there is a difference between regulatory improvement at the central government level and execution and implementation of those regulations at the local level. And I think that is sometimes a gap that results in experience of investors on the ground being different from what they are led to believe is likely to happen by the regulations in Beijing.
Right, but for a country of 1.4 billion and many layers of the administrative structure, is that something that has to be understood probably, and foreign investors probably have to bear with that, Mr. Quelch, to follow up on your question?
Of course, in any country that any foreign company enters, there has to be an appreciation of the regulatory environment, the local culture, etc. And, to make one point very clear, in sympathy with a comment earlier, there's no doubt that the efficiency and productivity of Chinese commerce has improved significantly. I mean, many companies in China do not enjoy fat profit margins. Many companies in China are being squeezed by competitive pressure in terms of their profitability, and that reflects a level of competition within the Chinese domestic market that is actually quite advantageous to Chinese consumers in many cases. In fact, it may be almost too competitive, such that Chinese companies sometimes are not able to invest in their own future as much as they ought to because of the pressure on their own profit margins.
Well, that's certainly a very fierce environment everybody is looking at. But at the same time, we're also seeing this latest commitment coming from the resolution. And I want to read that out because I think that is important. The central government talking about China will promote alignment with high standard international economic and trade rules and harmonize rules, regulations, management, and standards relating to property rights protection, industrial subsidies, environmental standards, labor protection, government procurement, e-commerce, the financial sector, and other areas in an effort to create an institutional environment that is transparent, stable, and predictable. Mr. Zhao, despite the different layers of bureaucracy that may create and the lack of forceful implementation, comparatively speaking, what does this statement say? And this is highlighted, I think, this kind of spirit is highlighted throughout the resolution.
Yeah, absolutely. I think for one thing, in the document it says opening up is central to the Chinese style of modernization. And also, I think in China, high quality opening up means that means right now, institutional open up is one of the most important components. And right now, I think the central government is promoting this new idea of unilateral opening up, meaning that without other countries committing to their end of the conditions, China will commit to further opening up, both on the institutional side and also on the market access side. And as you said, that China has been member of RCEP and applying to join CPTPP and also DEPA. On many levels, Chinese government from the central to local is trying to meet those high-end standards so that China can have a unified standards for the global investors doing business in China. Environmental regulations, labor rights, and other like IPR protection are all improving on the ground in China visibly. So I think moving forward again, for the foreign investment, for the foreign investors, these are not major obstacles. The major obstacles are still geopolitical. I think without the U.S. Continue to hamper this relationship, the investment will certainly go up.
Well, as a matter of fact, for the past 4 years, the number one challenge for American businesses, according to the AmCham survey, is U.S.-China relations. So that may go under some later renewed stress test. But I want to finish on this question. And Gupta, let me go to you. Now, the United States has put in restrictions on U.S. investment into so-called sensitive technologies in China, including semiconductors, microelectronics, quantum information technologies, and certain AI systems. But Qualcomm delegation is also arriving in China this week. What could they be seeking at this moment? And please keep your answer within 1 minute, please.
Yeah, this stems from Jake Sullivan's speech a couple of years back, I think 2 years back. He talked about force multiplier technologies. He laid out computing technologies, biopharma, and clean energy technologies. Now, within these technologies, still, particularly in semiconductors, there's still a lot of trade between US and China. I mean, it's in billions upon billions, and there is still continued dependence on reciprocal dependence. So I think there's a need to have those sort of conversations to be able to stabilize the market, but we need to be aware that there is going to be and is a continuing selective decoupling in these areas, these high technology areas, and there's a certain inevitability about it, and that's why China needs to develop its own core technologies in these cases.
We're going to leave it there. Many thanks to my guests, Professor John Quelch, Executive Vice Chancellor at Duke Kunshan University, Zhao Hai, Director of International Political Studies at the National Institute for Global Strategy, Saurabh Gupta, Senior Asia-Pacific Specialist at the Institute for China-America Studies, and last but not least, Victor Gao, Chair Professor at Suzhou University, who has been joining us on the line. with that, we come to the end of this special edition of The Point with me, Li Xin. As always, you can follow me on Facebook and X using the handle Li Xin in Beijing. On behalf of the whole team, thank you for watching. You've got The Point.